Today is Wednesday, March 25th, just before 2 p.m. EST, which is 3 p.m. Brazilian time. And let me see, UTC, that's just before 6 p.m. UTC for our friends across the pond. Today we have a returning guest with us, Andrew from Block Shoals. What's up, Andrew?
Hey guys, how you doing?
I'm good. I'm good. How
What's
have you
going
been?
on?
Very good. Yeah, just before 6 p.m. Appreciate you guys starting a little bit earlier. Um, Looking forward to chatting anything and everything, really.
Nice, nice,
Dude,
nice.
what's been going on with there's a lot of things that have been going on, man. You know, it's good to get you back, get everybody in the rotation back every quarter, but you want to tell me a little bit what you guys have been building, and I think we can shill a little bit here that Cayenne uses Block Shoals and was up when every other derivatives platform was down.
Yeah, I mean, I'm mainly
Options platform, I should say.
option platforms, yeah, which is the only derivatives worth talking about, right?
This is true.
Yeah, no, I'm here to shill Block Shoals and Block Shoals data. We think that we're the best. Fuck the rest, all the rest of it. Yeah, we've been essentially trying to ride the wave of on-chain options volumes and their explosion. It seems like we're finally getting to the point of retail, of institutions noticing that options are worth trading and that the perpification of everything is not necessarily the most sensible thing to do. So this has been expressed in a couple of different ways for us. We're building out new product lines, new coverage. Started with Bitcoin and Ethereum options, which is what we've been providing to guys like Cayenne for, I guess, years now. Now seeing not only volumes there explode, but demand for altcoin options, which I think we probably spoke about the last time I was here. But now really seeing that come to fruition. So hype options, for example, one of the big challenges for us in Q1 was just putting together a vol surface that works for hype, given that there's no centralized exchange where price discovery is really happening there. This is quite exciting. I like options for the sake of options. I think they're an interesting product. So to see adoption of that beyond just very short tenor prediction markets, across assets, across crypto assets, but also real world assets, which we're seeing a lot of demand for. This is really what we've been trying to position ourselves to take advantage of since we incorporated in 2021. Now it seems like it's actually about to happen. Touch wood. So yeah, I'm spending a lot of my
we've been waiting for options hour. We're waiting for the spotlight to come on, right? I mean, Deribit has of course taken the crown and taken the lead with institutions, but on-chain options, they get their moment in the sunshine, but they're never, they've never really been here to stay. You've seen guys come and go, you've seen tokens go up and down, you've seen users come and go, and lately it's been perps, and sports betting became very popular in the gambling sense, and then now it's like prediction markets, right? And I'm waiting for us to see the retail wave into zero DTE options on crypto. That's the new gambling form that should come up.
It's a natural extension, right? I think the feeling we have internally is that prediction markets are a gateway to options trading, to convexity, to leverage outside of perps for retail. It seems like the trick is that you just don't call them options, and then retail are happy to lap them up, right?
What do we call them?
Well, binary markets or prediction markets, or I guess
markets,
risk
market, short-dated prediction markets. You're seeing like popularity across Polymarket and Kalshi, and they seem to want to put some focus on that as well for the majors, at least. We've had a couple chats with them about the similarities between the two, and exactly as you said, how these markets are kind of gateways into you know, getting into options and then wanting to build on upon that because you know you get your linear bet there, and then people start thinking of, well, how do I build this out into a 2 month strategy, or you know maybe it's just a 4 week strategy where there's some event coming up that I want to position myself around. Um, I think prediction markets, when you think of them in that sense, like help build someone who is not familiar with options the correct like mental model to start thinking about strategies, right? Like, um,
Yeah, you start to think of strategies in more than one dimension, which is hitherto been okay, it goes up, it goes down. There are now more things to consider. You have structured time-based events that you want to hedge against, right? Which is an actual use case for these really short-term bets, right? Especially when, I don't know, you're in Asia and the Fed speak at 6 p.m. UK time, 2 p.m. or 2:30 US time. That then becomes an actual use case. And then suddenly retail are now introduced to this idea that you can hedge with options. You have an insurance contract. It seems to be that you get them to swallow the pill by coating it in this Polymarket flavored peanut butter and then shoving it down their throat, and suddenly they're into options. I don't know. Maybe that's the way forward.
Yeah, you've seen it come and go though, right? Like you've seen even down to like I think it was the Blueberry, or I forget the name of the company, but they were like up or down in the next fucking 5 seconds, up or down in the next 5 minutes. You know, like just another form of gambling, or like, you know, like how do you have any edge there? You know, what is the actual price? It's just a yes or no, right? But when you look at options in the crypto space, or sorry, in the TradFi space, dude, zero DTE options run the world. Like retail loves zero DTE options. They love to play earnings, which doesn't make any sense, by the way, because most of the time it's priced in, but sure. They love to play zero DTEs. They love to play FOMC. They love to play events. And, you know, maybe it's access that they're on their phone. They're not sitting on the computer all day. They can do it, you know, in the bathroom. They can do it in the sitting at their desk. They could do it at the bar, you know, whatever it may be. Maybe it's just ease of access, but people love to gamble, and it's not going anywhere, right? Not to say that every options trade is a gamble and going to go, you know, 10,000%, but a lot of flow could come just from retail, you know, punting $10, $20. You know, people are doing this stuff daily, right? Like it's insane.
Yeah, I mean, you reminded me. Did you see the Polymarket bar on Twitter?
It's in New York, right? Monitoring the situation bar. Yeah,
this is crazy.
And all the power was out the first day. Did you see that? Great time.
Classic, most crypto thing I've ever heard.
Yeah. You got scammed. Welcome to that, right?
Well,
but that was a good one for sure. But it's funny because Polymarket try to say that they're not a gambling site, yet they are.
They're certainly.
What are they predicting?
Yeah, they would like to position themselves as a source of truth, right? Where you crowdsource what is going to happen. You have people put their money where their mouth is. You back your information with some sort of flow, and then that seems to have been working slightly too well with people who have too much information above and beyond the market, and executing bets on the back of it. But yeah, I definitely think that there is use cases for options, for derivatives, for contracts beyond just pure gambling. And I think that happens further out the curve, beyond 15-minute markets, beyond 1 hour markets, where the probability reduces down to a coin flip, right? In the extreme case, you have your tap to trade apps, right? Which, yes, an incredible UI and an incredible use case. And you tell that story to a retail user who's never touched derivatives before. They don't need to know anything about Greeks, anything else. They understand it, it's intuitive. I'm hoping that there's a way we can extend that beyond just very short-term markets. I think the way that happens is expressing options as a yield product, right? Which is the way that beyond 0 day to expiry retail flow, that's the way that these products are positioned in traditional finance. You have what we know as structured products, which are essentially yield products that embed optionality in structured notes. You lend a little bit of capital. Some of that capital is used to sell optionality or to sell volatility. I think that is the next logical step in crypto. You have, firstly, flow at the front end of the curve, which is then able to be hedged by market makers, or people can use that to hedge exposure further out the curve. Okay, step one. Secondly, you have a massive glut of yields in DeFi, which have just exploded. And thirdly, you have more eyes on crypto than ever, better access than ever, and more regulatory clarity. So people with the financial knowledge and tools and infrastructure to go and build these things feel comfortable enough to go and put capital behind it. Well, then you have a recipe for everything you need for people to start doing a little bit more than just throwing cash in a vault and selling covered calls. Now you can have a little bit more customized structures that we're more familiar with from traditional finance.
Yeah, that's always been interesting to me, and I've been talking about it for 3 years now. I even did another podcast with the Paradigm guys, and we interviewed the Bybit head of options at the time, head of Earn at the time. We had STS on. We had Gvol Greg. He was one of the hosts. We had a more institutional side podcast, and dude, those podcasts have like 200 views, and those are like the most in-depth, more institutional focused pods. And we were talking about structured products with STS 2 years ago now, right? And STS just partnered with Kraken. STS is in Singapore. I think they're opening up a US office though, but they are partnered with Kraken to start doing structured products and structured notes. Like, this is huge. In TradFi, you get more institutional flow there. You can put up more size. It starts to create a full market where true hedgers can come in and market makers can start hedging their risk and providing more than, like you said, like just sell covered calls, sell 10 delta calls in a vault every week. Like, that's only going to work so much, right? You have to have some, you could have a principal protected note. You can have a barrier note. You can have early knockout notes. You actually started to see this in altcoin options, where altcoin options traded OTC in these weird structures. There's a famous one that Flood did and a few others, that it was like a 30-60 call spread on hype. Like, that was like the first big OTC that altcoin trade that people started to take up. But people were doing knockout options, PPNs. It's really more, it's not in retail's face though, right? It's more on the institutional side. And when you sit and talk with the institutional side, they're all for it. But on the retail side, they're very uneducated and they don't know. I still think that we need to get across that options, not every options trade is like a 10,000% return, right? If you make 30% return on one trade, that's absolutely insane. And if it's something that's scalable, sizable, that you can put on, why wouldn't you, right?
Yeah, exactly. I mean, these things happen slowly at first and then all at once. I think that's the nature of exponential adoption. I think what's been tough in the past is having structural buyers and sellers on either side of the trade, at least in volatility. I think what one large shift we've seen over the last 18 months, maybe 24 months, that has had an impact on the term structure, has had an impact on implied volatility, is that you now have found a structural seller of volatility, whoever that is, right? You can speculate on who it is, but institutions love that Bitcoin and ETH have high volatility, high implied vol, and they're very happy to go and sell options against it. So this has been a very
this is new because I tried offering these services to a lot of larger players, And at the time, basis was so high, and they could leverage basis and make such a great return doing pretty much nothing that they were like, no, we're good. Well, now basis is like 2% annualized, that they have to go out and do something with it. They can't just sit there and do nothing every quarter and just roll contracts. You can speculate, like you said, on who it is, but it's anybody from miners to large treasuries to whales that are not a forced seller, but a true seller in the market, right? And that dampens vol only so much, and then one day it blows up. And we're trading definitely higher than we were in the last little bit, but maybe that's caused by world events and the whipsaw of everything. I guess a question that somebody brought up last time that we had on was like, what's the most misused metric in CryptoVol? Something that traders look at consistently or constantly, but interpret wrong, either on the retail or the institutional side.
In volatility specifically?
Or like maybe just one of the tools that you guys offer, right?
That people use incorrectly.
No, like a lot of people look at skew and they're like, oh, well, this is going to happen because it's skewed, or front end's lifted, so it has to go lower, right? Well, that's there's some ones that I could think of.
Yeah, there's some fundamental misunderstandings of the shape of the volatility surface and what it actually means. I see that in the way clients speak, the way we interact with people as well. Fundamentally, I'd say that the vol surface is something to be challenged rather than something that is a bona fide forecast of what spot's going to do. Perfect example, we've had a massive skew towards out of the money puts over the last month and a half, 2 months. Well, basically since October 10th, really. But over the last month and a half or so, we've been drifting higher. So had you looked at that at the vol smile and said, okay, markets are expecting us to sell off. Maybe the futures curve is below spot. I'm going to go short Bitcoin in perps or whatever. Well, you would have pretty much bled out on your premium. It would have been a very poor trade because the market has priced for this role. So the other reason that the vol smile can be shaped in this way, or the vol term structure can be shaped in this way, is not because people have a view and are putting their money where their mouth is on their view. It could be two other reasons, which I think are key. One is just structural. We see this a lot in the vol smile of the S&P 500 as a great example. Well, your vol smile in the S&P 500 is massively skewed towards puts all the time, and yet the drift is almost always positive in the S&P 500. It's because people have structurally long positions and are far more scared about to the downside than they are to extra upside. So you have pension funds who are forced to hold it just to beat the market, and then they hedge downsides because they need to pay out on a schedule, so they can't be.
But that's just a mature market, right? I mean, yeah, that's just a mature market. That's why you see weird things happen at OPEX or at futures rolls, or this is just part of becoming a more and more mature market. It's not that the thing's just going to go to fucking zero instantly, right? It's very, people just look at one thing and like, yep, that's it. It's like, well, have you looked at anything else? Nope. This is my thought, and okay, sure, let them have it.
Exactly. So look at some of the blowups we've had in February and in January of 26 and compare that to the same sorts of blowups that we would have had in 2022. I propose that we are getting to a more mature market in crypto where vol smile positioning, vol surface positioning is driven more by structural flows rather than just reaction and just view taking. And I think that is demonstrably different to how we moved 4 years ago.
Yeah, how do you think that the market's been pricing in World War IV now? Which World War are we on? I'm not sure, And at some point, it seems to be getting smoothed over, and the market's looking a little bit more ahead. We're still trading the same range since the beginning of February, like almost 2 months, right? but we're not trading lower, right? We're not trading 40s, 50K. We're pretty steady here at the low 70s, high 60s. Is there any alpha for us? Is the market telling us anything?
Well, is crypto a risk-on asset or a risk-off asset?
I thought it was digital lead. Who knows?
Digital lead balloon drops like a stone whenever there's any
Mhm.
news. It doesn't matter what the news is, sell off, I guess.
Yeah, any news. Yeah.
Same question for gold. I mean, is gold a safe haven asset now, or is it a meme coin? Like, what reaction should I expect if there's news that the war is going to be extended by another 3 weeks? I think it's
But gold has a different thing because people line up to buy physicals. You saw that crazy, if you want to call it a blow off top or whatever, like 55, 5,600. People were lined up hours before the opening. Also, paper gold trades way more than physical gold. Of course, people aren't moving truckloads of gold every second on futures delivery. They just will take the cash. And then you saw, I don't know, whatever, for low 4,000s or mid 4,000s. And then we ran it back up again. And now pretty much since the war, which would be the beginning of March, I think, like it's just been down only, right? It's trading differently. Are we pricing in, no war, never war, or are we pricing that maybe gold shouldn't have gone to 6,000?
Well, yeah, not to get too ambitious in my macro commentary, I think at least part of it can be traced to reversal in yields. Like the big move has really been in yields at the end of the day. Gold always responds in the same way, just because it's an asset that doesn't have an interest rate. Okay, I'm not saying anything too controversial. Yeah, the real attention share has been taken by oil, right? Any asset that's moving with any sort of volatility sees a lot of the flow. What's different this time around is that you can now trade that in the same places that you could Bitcoin and ETH, right? So if you're a crypto trader looking for exposure, you want to take a view, you want to, let's say, gamble, you want to use something with leverage, and at the same time you have a crypto Twitter tab open. Well, crypto Twitter is now oil Twitter, right? The joke is that everyone's added commodities trader.
Twitter, yes.
Right. And the week before it, you were a military analyst, and the week before you were whatever. Precious metals trader. That was the other one. I don't think that it is irrelevant that you can now trade like all of these assets with perps using stablecoins. I think that has an impact on the market, and I wonder how much of an attention spare that has taken away from other assets. Maybe disproportionately from maybe altcoins compared to, let's say, Bitcoin and Ethereum. What have you guys seen in this vein? Is that something that you've seen evidence of? I guess I'm just speculating.
I've seen evidence of, well, I think we can see it. Let's say we take Hyperliquid, right? Like more silver and oil was traded on Hyperliquid than at their, peak attention than Bitcoin. That's an insane stat when, it's a huge exchange with billions traded daily, and people are focused on commodities, whatever's hot, right? Just goes to show that people's attention spans are still short, quick. It's more for what I see trying to get people on, like, let's say to the new exchange, is like they don't have any idea of that it's mainnet, or they don't have any idea, they're not following it enough. When there's so much going on, there's so much commotion, they're like, fuck, I can just deposit into this exchange long oil and get liquidated in 2 seconds, and I'd rather do that than going and trying out a brand new exchange. And it is a little different now than, let's say, bull market. Like this is like weird bear market times, like basis is zero, retail action is way lower than it was, at 124K. Like you got rugged by a president. Like you have to sleep with that at night. You got rugged by a sitting president. People they have to realize that, right? And it's just one of those moats that we're in, right? We're still the same price as 2021, like in Bitcoin and ETH. Like we're not up. We were up, but not anymore, right? It's just our spotlight has shifted, and when everything goes to all-time highs every single day and it's on easy mode, why would you come trade in crypto? Like go look at I don't know, AMD today. It's like up like 8% or something that I looked. Go look at Tau. Tau has attention share because of the Silicon Valley VC is talking about it on Twitter. Like, it's more money just flows to wherever the spotlight is. So it's going to be interesting to see.
They had a real partner.
What's next?
No more, Google or Amazon were using AWS, GCP type of partnership announcements. They had some Intel engineers co-author a research paper with them.
The Taus?
Yeah, well, it wasn't Tau, but it's a subnet on Tau.
Yeah.
Tau is now getting, obviously the residual flow from that. Because people have
and Jason, the guy from the All In Pod, is like, oh, buy Tau. There was that too.
There was a guy that I saw on Twitter, back when Tau first launched, that was saying the same thing that Jason is echoing now, or parroting now, and comparing it to, saying it's the Bitcoin of AI tokens, and doing all these comparisons to like the launch of Bitcoin, the launch of Tau, and anyone that huffs that's huffing tokens all day long, getting their 250K of tokens huffed from 9 to 5. It's easy to subscribe to that, but I think all crypto tokens that aren't Bitcoin fall victim to attention gravity, right? Like, I mean, even Bitcoin
going to zero,
but
going to zero.
But there's at least this ever-growing baseline because of it being used as like a global hedge versus everything else still very much in like speculation territory, or high spectrum speculation territory. Even ETH, as it becomes more ingrained in like the institutional world, it still is the high beta for play to Bitcoin for them. It's not it doesn't have the type of grounding, I guess you could say. So
it's just attention gravity market, right? Like
everyone in Silicon Valley can be bullish as they want on Tau, and it's a great sign that it's a bear market right now and Tau's doing those numbers. But you have to remember that like we could be a half a year away from a real bottom, or the bear market ending, and how much attention can these projects harness through that time period to where when the market does come back and participants come back, where will their like attention focus be, and can it harness the same amount, if not more, attention gravity then? Because that's when it will really pay off, for the non-believers, the ones that are just speculating on token price.
Yeah, it's goes back to retail and spotlight, right? Andrew, I had a question for you. For somebody who's never traded options and only traded perps or spot, why should they come to options?
Far more flexible. But the main answer is convexity. Options just allow you to win big with small risk. So yes, there's risk, but you can allow that to be a defined risk. The point of convexity is that your losses are small. I pay a single premium. Okay, if I lose, I don't get any of it back, and I know what I've lost. But your upside is potentially massive. This is the point of convexity. The other reason is just customizability of positions. We spoke about it earlier, but real benefit of options is that you can take views that are more complex than spot go up, spot go down. If I'm trading, perps on a meme coin, then I make money when it goes up, and when it goes down, I get liquidated, which I guess is defined risk, and it's a different kind of premium that you pay.
Yeah, zero.
Yeah, I go to zero very quickly, and I blow up my account, and I make a new one. I wait for the next paycheck, and I make a new account. With options, you can take far more complex views. Firstly, I can say, okay, I think spot's going to go up this amount, but not more than this, and I want to get paid when it does that, and I'm happy to forego any further upside payment. I pay slightly less to customize my position. You can do that with something like a call spread or a put spread, but in the opposite direction.
Mhm.
But more basically, you can take a view on not where spot is going, but how it gets there. If I want to trade, I don't care which direction Bitcoin goes. I just want to get paid if it moves. I have a view that it's going somewhere. I mean, this is, I think, the commentary I'm hearing a lot about oil, right? I don't know where oil is going, but I know it's not staying here. It's going to go through the moon, or it's going to go through the floor. Options allow you to do this. I can trade a straddle, for example. Or if I don't want to take a view on it moving, I think it's not going to go anywhere, I can collect the premium. I can earn a yield that is far more sustainable and far more explicit of the risk that I'm taking on, that I'm being compensated for in my yield, far more clear what I'm risking than some sort of leverage restaking loop that I do on some bogus chain that I've never heard of and not done my research for. I can go and do that in a far more sustainable way by selling options systematically on something like Bitcoin or something like Ethereum, where I'm monetizing the volatility, and I know why I'm getting paid. I know the service that I'm providing to the market. I'm being a liquidity provider for volatility. Far more sophisticated, far more customizable, far more flexible. If you understand it, it's far more explicit what the risks you're taking are. More of a question of why you would not trade options, why you would trade perps instead.
I think it's ease of access. Monkey sees green, monkey sees red with perps. With options, it is the more. It's not that it's complex. I don't like using the word complex, but it's the most customizable way to put on any sort of market view that you could possibly think of. If you wanted to get upside with like a ladder or something, or a 1x3, like, you can get paid to get upside. You get a credit, but it just can't go above a certain price. But you could make that super wingy, right? But you can get paid to put on a directional view, right? You can make money when it goes a direction. You can make money when it sits in a range. You can make money when vols go up or vols go down. Had nothing necessarily to do with price going up or down. You're just trading volatility. It's a much more, I think you said it, flexible product than people expect. And what I say to people, instead of just buying outright calls or outright puts, if you're a perps trader, come in and start doing call spreads or put spreads. You have a exact risk. You have an exact payout if price goes above or below X, on depending on which side you took. I always tell people to start there.
If you're comfortable trading binary options or prediction markets on, let's say, Bitcoin up or down, call spreads and put spreads are basically a options for dummies version of getting people from prediction markets into fully fledged vanillas trading, right? A call spread is not but a binary option or a prediction market, but just with the strikes slightly further away. So you have some gradient in the middle rather than some binary $1 paid, $1 lost, right?
Yeah. I guess I had a personal question, Andrew. How did you guys even start? Because I know you guys are in the UK, but that's all I pretty much know about you guys.
Yeah, so the story of Block Shoals, the origin story.
Yeah.
The lore is pretty simple, pretty straightforward. My boss, our founder and CEO, Eamon, story starts with him mainly. It's his story. We launched in 2021. I think Eamon got interested in crypto from as far back as 2018. His background is in derivatives trading, interest rate derivatives in TradFi. After that, did exotic interest rate derivatives, got interested in crypto, very bored of the old banking system, and then looked to launch Block Shoals in 2021. think April Incorporated with a couple of like-minded people. So very much a TradFi institutional pedigree, but trying to take all of that experience and then apply it to crypto. I joined in November 2021, which coincidentally was the last time crypto was at 69K. That means I've seen Bitcoin in my career now hit 69K from above, from below, and then from below, from above again. So it means I've been in crypto for far too long now, I guess. This was my first job at
Too many cycles.
it's sinusoidal like this. I've now seen Ethereum hit 2K from every different angle as well.
Yeah, sideways.
Sideways, up,
I've seen it.
down, forwards, backwards, north, south, whatever. I joined Block-Scholes. This was my first job after university. I had studied mathematics, was interested in derivatives. I thought, okay, I can either look to do this in a bank or in a hedge fund, and I applied to those places, or I could do it somewhere where a lot of this stuff has not already been built, and I get to be involved in building out a lot of the infrastructure, a lot of the tools, a lot of the trading structures from the ground up. Whereas if I was doing this in an established market, then, you know, bond maths has been around for 45 years now, so it's far less of an opportunity for me making my mark. And so far in crypto, this has been what's kept me here, is the ability to go and build a lot of this stuff, build this company from the ground up, be a part of that growth story, also do interesting problems and do it in derivatives and with a lot of mathematics. This has been the most fun I've had.
Oh yeah, but who's like your go-to customer? I know that you guys have. Well, I'm a paying customer. Okay, you know, Cayenne's a paying customer. You know, you have Protail institutional guys. You have, you know, I want to hear from you. Like, who is your go-to clientele? Because I know you have some various packages, and then you have simple stuff like a newsletter. That's a paid newsletter. But like, who's your main clientele? Who keeps the lights on?
Yeah, fantastic question. Our main client was not someone that we went out to sell to originally. Our ideal client profile is DEXs, people who want implied volatility. So people like Cayenne, for example. But yeah, more generally, it's anyone who wants high quality, high frequency, properly created, derived derivatives data. I use those words slightly separately. So derivatives data, I mean perps, options, futures, anything that exists in crypto, we try to cover it. And then derived data, I mean stuff beyond things that you can get from aggregators like Glassnode or like CryptoQuant. We try not to just take on-chain data and aggregate it and push it back out. We try to go beyond just repeating order book data and pushing this back out. We try to add value to that data by applying some financial models. So perfect use case, perfect example of that is implied volatility data. Yes, we could ingest options prices from centralized exchanges and spit those back out and everyone would be happy. Where we differentiate ourselves, the edge we provide is that we calibrate volatility surfaces to those option prices and we spit those back out. This is fantastic for anyone who needs an independent reference point for implied volatility. Fantastic for everyone who wants to backtest an options strategy. We have that data from Jan 2020 onwards. You'd be surprised by how many people reach out to us and they're just an independent quant shop or an independent trader, someone maybe who is ex-TradFi, someone who's just looking for high quality data, doesn't have a quant team to go and build it for them themselves, I guess has not found Claude bot yet and is happy to set it loose on it. You'd be surprised by how many people of that caliber, of that type, reach out to us and ask for this data just because they want to go and trade. So one initiative we've been working on very recently is making it much easier for people to reach out and sign up to access our data. independently without needing to talk to anyone, without needing to speak to someone. Ideally, we want someone's agent to reach out to our API, sign up, spend their money on the credit card, and then start playing with our implied volatility data, right? This is one side on the data side. The other side is, I guess in the middle, we have recently pushed out our backtester via MCP. The goal is that this tool that I was using just to serve research clients to backtest quant strategies and options, perps, whatever, to make that available to anyone who is using an AI chatbot, to anyone who's using any sort of API calls. We want someone to be able to backtest an option strategy with natural language processing. So we built this. We took a tool that we had internally and we just hooked it up to Claude, to MCP server, to any sort of agent, and allow people to self-serve, pull that data, and start getting backtested results. This is something that I had access to just because we have access to the data. The real unlock for us was agents and LLMs providing an interface for people to interact with that with natural language processing. That was the real blocker for us. We didn't have a good front end to go and deliver a backtester. LLMs killed software. It's like I never learned to drive until I got a driver, and then I never needed to learn to drive. Well, I never learned to code until LLMs came along, and now I don't need to learn to code, right? It's the same.
That first one, I have a friend. Sorry to cut you off, but the first one, my friend's wife doesn't drive. And for like 5 minutes, I was like, yeah, okay, cool. I get it. She doesn't drive, but she can drive because she has a license, right? And he's like, no, you don't get it. She doesn't drive. And I was like, oh, she had a driver her whole life since a baby. She doesn't have a license. She doesn't drive. She doesn't know how to drive. She's never done it in her life. It's like, okay, well, I think I need to level up in this world.
Well, it's the same with coding now, and like everyone who never bothered to learn how Sheets works, how Excel works, how Google Docs works, right? Now agents can all do that for you, and now everyone who had previously built a moat around software that they developed should be terrified by all of
it's gone, right?
Vibe
SaaS is gone, right?
Yeah, I hate to sound like the VCs that are saying this on podcasts, but I have lived this experience. I have seen myself say, no, I don't need your dashboard. I don't need your software because I'm paying for Google Copilot or Gemini or Claude and I can just build it.
It costs me $200 a month, and I can build 10 tools instead of paying 20 grand for one. And that's the other thing, like enterprise software. I think that, I mean, to get a little off track on the Claude bot or the Claudes, but you can have a team of 2-3 guys, or even Cozy's one guy with, family man, kids, and he's built more shit than I've seen a lot of people build in years. And it's up running. He has paying customers. It's like not even a vibe coded project. It's like that doesn't work. It's like a real product with real users, paying customers, and he built it himself. Like, that's an insane thing to say, even from a few years ago, where it's like, okay, now we need 20 employees, 50 employees. You can cut a lot of that shit down. Are you guys? What'd you say?
Here's my my more like grounded take on it, right? When you look at if you don't learn how to optimize one more optimization. If you don't learn how to optimize like your skill set leveraging AI, you will be replaced by someone that will. It's not that your job is going to disappear for most people, right? I think right now we're in this phase where there's tons of layoffs happening because people think that AI can do this stuff. But the problem is that you need capable humans to do this stuff with the AI. And if you look at the majority of humans that exist out there, they think this stuff's really cool, but they don't have the drive to sit down They don't have the dedication to sit down for multiple hours over multiple days to do the thing. And most will stop at 80%. The other thing is like the majority have no like engineering understanding whatsoever. So if they're making like a dashboard that's using a bunch of free APIs, like sure, maybe Claude can plug that all in for them and like make them feel like they built an app. But for the majority of stuff, there is a significant amount of banging your head against the wall if you're just trusting it to like one shot your apps for you. Like I can't think of a single app that I've had Claude one shot because it'll one shot the design and the scaffolding for me. But then when it comes to wiring everything up, like there's zero reason why you would give any LLM any of your private like credentials to wire any of the stuff up that you need if you're setting up databases or separate DNS or fucking auth configuration. Like there's so many different things that you need to do yourself. You can ask Claude how to do it and it will give you instructions, but even those like 5 steps that it may take are too much for some people to want to finish it off. So I don't think that like I agree that it's a tool that now anyone could use to build anything they want. And that's like the beautiful thing about it. But you have to actually like want to build that thing really bad. And like the thing Marty's talking about I built was a docs replacement site for like Mintlify and stuff like that. Because just when I was building these hobby projects, one thing that I always focus on is documentation because I used to hate when I'd go to like a new crypto project and like their docs is just their white paper or their research paper. And there's zero information about like how to hook up to their API or how to actually use the platform, like nothing. And so I always write really like detailed documentation. I had one for this hobby project. I went to go build another one and Mintlify it forwarded me directly to their email to like pre-filled an email for me to send to them about pricing. And the response from them when I asked about how to set up a second account, they didn't tell me that they had an open source like option. They just said that like if you're building open source projects, you can just build more for free through Mintlify. There's limited features, but like you still get most of the features you're looking for. But if you're building a commercial product, it's $250 or $300 depending on whether it's solo or a team thing that you're doing, team account. So when they emailed me $250 or $300 for a second set of docs, that was the moment when I said that to myself. I was like, I could just build this myself in a night. Why the fuck would I pay someone $300 a month for fucking hosting Markdown / MDX files? Doesn't make any sense. And I built it. It took me 2 days, two nights of not playing video games and building something.
God forbid you had to take a day off of video games to build something that actually works. Jesus.
Yeah. Kids go to bed. I pulled out my laptop instead of my PlayStation, and I built this thing. And it's like it's so low effort if you care and you understand like how to build something, I guess. So I was like, I'm just gonna make it free. Like, if you want me to host for you, then I'll charge. You can pay for hosting, and I'm going to charge you a fraction of what like Mintlify would. And all the features are free. So if you want to host yourself, like here's everything. And just like when I get bored and I add new things to it, it's free. Here, just update it. And you have AI chat, you have fucking, custom domains and DNS redirects and everything that's in all of the other ones except the editor is there. So it was like, yeah, just build it. And same thing with everything else I've done. It was like I built a couple games that were like I built a Tien Lun multiplayer game for my wife. It's like a Vietnamese card game. And some of those exist, but none of them exist to where you can play with people It's like it's multiplayer, but it's with anyone around the world. There's no code sharing.
Yeah.
Yeah. So I just built one that had code sharing so that she could send it to her sisters and they could all play together. And there was another game when I was on a plane and me and my son were both playing the same game, but it was solo. And I'm like, why don't they have a multiplayer version of this game? Like it'd be so much fun to just like be able to it's kind of like Tetris, but like a modified Tetris game. Like it'd be really cool to mess with people's flow. Like if they thought they were going to get something and you were able to purposely block it to like make them lose, that'd be a much more interesting like, you know, form of this game. So I just spent a couple days and I built like a multiplayer version of that where you can share codes and play against other people. And it's like just simple problem spaces for like individuals. It's really fun to have something like that where, you know, from idea to product, it can take you just a few days. But I just don't think that there's like we are surrounded in the bubble of people that want to do this stuff, but outside of our bubble, most people do not care to.
My wife thinks I'm retarded.
Yeah. I mean, it's just like they have their
Which is
hobby.
probably true, but
Oh,
So
related.
it's like they don't want to allocate time to do this other thing when it's like just a hobby, right? Like, or they have an idea, but then they're seeing other ones come out that it's just like theirs, so they just wasted 2 weeks, you know, building something they don't think is going to do well, so now they stop. I've heard this like a ton from some of my non-developer friends who were really excited about, you know, hearing all this cool stuff Claude can do, and then they're like, yeah, dude, I don't know half the shit that I have to fix. Like, I don't even know where to start. Like, and I already saw ones that are just like mine, you know, so like, why am I going to build this? And it's like, that's the wrong reason to build it. Like, you build it because it's useful for you, or it solves a problem that you found with some other product. And if it didn't take you very long, then like just release it to the world, and like people are going to appreciate that.
Yeah, I mean, you see, I agree with almost all of this, and it's so gratifying to speak to other people who are having sort of similar experiences. Because to your point, you look around outside of this bubble, and it seems like everyone's unaware. Like, go talk to your parents about Claude Bot, like OpenClaw. They look at like you've just, you know, you're the Antichrist or something. And you try and say to people like, this thing is going to be so crucially important, and if you're not preparing for how this will impact your career and your industry, then like, what are you doing? And you just sound like a doomsday sayer, right? So yeah, incredibly gratifying to speak to other people having similar experiences. It basically takes anyone who has that sort of like even a spark of Tony Stark in them to go and build things and be an engineer. It just 10x's them, right? So if you think about all of these people who are just vibe coding dashboards because they've seen it on Twitter and seen people do it online and got inspired and thought, okay, what's this about? Execution being so cheap has allowed them to do this. Imagine how it enables anyone who knew how to code to begin with, right? And we see that internally.
Well, it's like a catch-22, right? Because it should enable them much more, and those that embrace it, I think it does. But it also has been making people feel like they're losing like a piece of themselves. It's like, you know, you spent a long time learning this skill that was really valuable to the people that understood what this skill actually was, right? Like to the normal people, they look at it like it's a nerd thing, but like to anyone who understands, it's like these are the people that build like all of the infrastructure for everything that we use. And now their skill, right, their edge has almost been stolen from them, and in a way that's even helpful to them, right? So it's like now you start writing less code and you become less familiar with like how to, or you have the cold start problem where like you don't even want to start writing the code. You just want to write the PRD and like get to work because you feel like you're wasting time. And I was talking with a friend of mine the other day who is a really, really good engineer, like probably I think one of the best unknown like developers in our space. And he was having that kind of like, it's like a midlife crisis, but for developers. Like he was starting to have that because he was building a lot of things for agent orchestration to like help his workflow and optimize like the things he was doing. And he was talking about that, how, you know, it was like, it was kind of painful for him, but it's also very freeing because like, you know, he's offloading this work of this thing that he values very much, right? Like the building part of it, like this is my idea, I'm going to build this thing. And when you're offloading that like responsibility and task, and you're just watching something else do it, it's still exciting to see happen, and like exciting to be able to go in and tweak it. But like the feeling of actually like building that thing, sharpening your tool, and and starting to craft is now different, and that is affecting, I think, a lot of people in a lot of different ways who their
Yeah,
career has been development, or their whole identity is being a developer.
yeah, it becomes a complete mindset shift in that you have to reskill, right? And if you hold on to that instinct of, no, I learned this skill, my edge is how well I can write this code, it becomes almost masturbatory in that you are just performing the action, not with the end goal of completing it, of building the tool as efficiently and as quickly and as cheaply and as with as many features as possible. That is now almost exclusively achieved by using these new AI tools, right? I can't think of an AI.
Cloudbot will one shot that guy's job in 5 seconds. It will write the code. What took the guy an hour or two to write? It's like, okay, I finished it. You're like, what the fuck? Like it's a really big shift even from a few months ago, right?
Even if you gave me the GitHub repo and I could copy it and I had it on screen, I couldn't write it word for word as fast as Claude can.
Oh, for sure. I gave it 160 articles this morning, and I was like, okay, I'm going to give you an hour. I'm going to be back in an hour. I want you to read all of them and tell me, like the main takeaways and what we could use here to benefit our system. And he was like, okay, I'm done. And I was like, it's been 4 seconds. He's like, yeah, I got it all. It was like, what the fuck just happened? Like, it took him like 20 seconds. And I was like, what? Like, and gave bullet points, authors, who was talking about what we could implement. And I was like, this is insane. It just read like 1,000 pages in like a few seconds. Like, versus, I had this conversation the other day over lunch with a friend who, his wife says he's never read a book in his adult life, which is probably true. But now he's really not reading books because he can just, put it into AI, give him the summary, and it can implement the stuff that he needs out of that book versus sitting there, not necessarily wasting time, because reading gives you a new skill or a different skill of, sitting at peace with yourself for hours, processing information. But like he's reading thousands of lines of code every day. He's reading thousands of prompts every day. Like, he is reading, but it's not like he's sitting there reading fiction, right? It's a different type of
one
reading.
I think to what you were saying earlier, Andrew, like what you can do better though is what you could do better than Claude is, once it spits out that code, you could review the code base and probably fix things more quickly. If like you had an understanding of the architecture, right, of what you wanted built and what was built, you could probably fix things more efficiently or with higher accuracy than the amount of effort it takes to have it continue to rerun.
Yes.
And make up reasons to pass over certain checks or modify test files to not trigger. Like, you will do a more efficient job of code cleanup and quality code review than it would. And that's where I think like the advantage is, right? Like when you have that experience, your products are going to come out much more polished than the guy that, learned about Claude last month and now thinks he's a 10x engineer.
Yeah.
And then I'm trying to think what you were just saying, Marty, because I had something to that too.
Reading thousands of lines of code versus fiction.
I actually think reading books is probably one of the like most valuable exercises that humans can do right now, because we live in this world of like of hyper information where everything is given to you in not only excess but in a way to where it stimulates you into thinking it's important, right? Like all the information you get is made to seem like it's a breaking news, a headline, it's a situation you need to pay attention to, which you in this mentality of like, doom scrolling, right? Like of needing to doom scroll, not to doom scroll, but to stay on top of what's actually going on in the world. And in reality, like none of that's important, right? Like you're allowed to like pull your cash off the exchange. You're allowed to take time to yourself. You're allowed to close your trades. Like you don't have to be locked in to whatever it is you're doing. And reading is one of the only, besides like hiking maybe, right? Like reading is probably the only thing that helps you break your mind away from that and focus on one thing for a period of time, and exercises your mind to obviously be thinking about one thing over some extended period of time.
Yes, we need to find as humans a way to justify going through those motions for our own health, whereas previously we were going through those motions for completing tasks. People used to read the news in order to do something, right? Or used to read fiction in order to, maybe fiction's a bad example, through a textbook rather than talking through with an LLM. Now we are forced to reckon with the fact that if you want to be the most efficient person in the room, you cannot go through the traditional forms. You have to use the LLM to study for your test. You have to use the LLM to write code, because no one can write code.
We're falling behind, right? Like you'll just fall behind. Like I'm not saying give a fucking 4-year-old AI, but like it probably could teach him how to fucking count numbers faster than like going to school. If you let him just use it for like I also don't have a 4-year-old, Cozy. Let me know, like going to school for 8 hours a day versus like here's this bot and it's going to teach you how to math in 8 hours. It probably learns more than it does at school. It's the fucking kid.
Your child. This is where I think like the homeschool and like public school, private school, kind of like what the debate over the benefits misses is socialization and like learning how to communicate with other people, share, take turns. And this isn't just for a 4-year-old, right? This is like up through high school. You're still like your brain's still developing. You're still learning how to do this in compounded, more complex fashions of taking turns and sharing and things like that. But being able to negotiate, deal with other humans, learn that not every human thinks and acts the same, has different wants and needs from you. You don't get that type of experience when you're like just being taught by a robot, or you're just being taught at home.
Yeah, it just agrees with you, right?
You and I'm not saying that public school or school where socialization is the base is better than homeschooling either. I think if you homeschool, there's plenty of like sports clubs, and not just sports, but activity clubs, and things you can do that are tied to the city but not tied to the school, right? All the way through high school. So there's no reason you can't also socialize your children in that way. But yeah, I think that you can learn. A child will learn more given that set of tools, but they're not going to mature in a way that we would need them to be a functional member of society.
Yeah. I think
Andrew, last part I gotta jump. Sorry. What's on the roadmap? What are you building next? I know you guys you taught me how to do the CloudBot integration, the Claude integration, but how do we see your business integrating new platforms or new tools like this in the next months?
So pursuant to the conversation we just had, we're building what feels like more than ever, right? Because building is now no longer the cost. The bottleneck is code reviews rather than ideas. So what we're building on is the base that we had already. Firstly, trying to keep up with AI tools and AI tooling, try to find ways for us to sell no longer to consumers or to other businesses, but to agents, finding ways for agents to find, discover, and pay for our data. If we think software is dead, then we're positioning ourselves as a data company. Our moat is our digital assets, not the on our balance sheet. It is data as a digital asset, which is now a commodity that is at a premium. So focusing on this, more concretely, building out real-world assets, perps, volatility surfaces. We're seeing a lot of demand from DEX clients who are looking to launch options on a whole bunch of assets which you couldn't trade in crypto previously. So oil, gold, equities, this kind of stuff. Anything that's getting attention share, anything that's in the news, we want to be able to provide data for it. Yeah, and in the short term, I will be in ETHCC next week in Cannes, looking to have a lot of the same kind of conversations, looking to find other people launching perps or options dexes on chain, looking to solve problems with derivatives data. That's the shill.
We're looking forward to it. Where can people reach you? How do they contact you? I saw the new sign up was much different than before. That no, they don't have to talk to anybody now. Now they made it easier. Put your credit card in and swipe.
I mean, Amazon perfected that, right? With one-click buy. So why do we think we're any better? Why do you need to talk to me, to someone of our salespeople, in order to go and pay for our data? You know what you want. You have the pricing matrix. You take the menu and you order, right?
Yeah, I think that's the thing, right? Like CS, customer service, is twofold. Like AI is totally useful on the front end of it, but like for the actual support, that's where you want humans. Like everybody hates when they send an email and they immediately get fired back like an AI response email, or if they call in somewhere and they get shuffled through like 8 different automated like AI inbound requesters or inbound receivers before they can actually get to a human.
One thing about Blockshoals is that it is frighteningly easy, at least from my perspective, for people to get in touch with us with issues. If you have a problem with the research, then you email me and I answer. Same with our engineers. If there's ever an issue with our data, touch wood, then they get a PagerDuty notification and they get woken up. We don't have an AI system solving this. What we're trying to make things easier is that if you want to come pay us money for our data and you want to get started, then yeah, you don't need to wait for me to wake up and then tell you how to do it. We want to make it as easy as possible, because once we solve that for people, then you can solve it for agents as well. We want agents to be able to find and do a sign up to our data instantly, right? We want to show up in the same way that people used to worry about showing up at the top of Google. If you ask Claude, ChatGPT, whoever for implied volatility data in crypto, we want our name to show up. So this is a big focus for us in Q2 and Q3 of 2026.
Well, let me know if you need any help or if you want to come back on the show and talk about new products. We're always here for you guys.
Yeah, really appreciate the support. I want to chat to you guys as much as possible. Cozy, I think we'll try and meet in Cannes.
Yeah, for sure.
It's Canes now.
For our viewers, tell them where they can find you besides hunting you down in Canes.
In Canes, you can find me on Twitter. We are at Blockshoals. We are available on Substack and blockshoals.com for our research. We have a newsletter. You can find us. We put a daily comment out where we talk about crypto news. We talk about macro news, anything that's happening in DeFi. We have a really privileged access to a bunch of teams in crypto now. We've built that network, so it means that we're able to see a lot of that news very quickly. You can sign up for, I think, $1 a day. Take the research however you want. You get access to our Telegram bot. We have a Telegram channel, which you can find on, I guess I'll dump the link to this in the Options with Marty chat. But I think other than that, we are at Blockshoals. Try and keep it simple, silly. Where else are we available? I'm going to be appearing on a bunch more podcasts and webinars, trying to push the name out a little bit more. Yeah, where else do people appear?
You guys have Facebook, TikTok,
LinkedIn and Facebook.
LinkedIn.
Yes, I'm on LinkedIn. Yeah, Blockshoals. Yeah. My name is Andrew Melville. Blockshoals right here. On the internet, if you look,
we'll get the intern to post all the links. If you want to send it to me privately or put it in the options chat, they'll post it below.
Perfect. Yeah, I'll do exactly that.
And for
alrighty.
For our viewers who have not got onto Cayenne yet, we just opened up the caps again. If you need a code, you weren't on the wait list, shoot me a DM on Twitter. or X, whatever you call it now. Happy to get you one so you can get access. No fees right now. Spreads are tight. We got liquidity. We got Block Shoals giving us data. What more could you ask for?
I do have one thing. So Deribit went down for randomly for an hour, and Block Shoals kept Cayenne up, alive, running well. Every other DeFi options product that was linked to Deribit as the truth of source also went down when Deribit's heartbeat went off, and Cayenne was the only one around. So we're working on deeper liquidity, tighter spreads. Spreads are okay right now. Perps are getting better. Come trade, no fees. We'll see you guys in the books.
Adios. Enjoy the rest of your week.